Today is Tuesday, July 8th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. As you can see, since my last update, my portfolio had a gain of 1.02%, Pershing Square saw a gain of 2.72%, and the S&P 500 had a gain of 0.45%, which year to date puts my portfolio at a 21.64% gain. Pershing Square is at a gain of 13.03%, and the S&P 500 has a gain of 6.08%. These are going to be all 14 of my current positions. Right now, Microsoft, Nvidia, Meta, Dave, and Palantir make up my top 5, and those make up 32.73% of my portfolio. Since my last update, Dave has moved slightly higher. Right now, it sits at 193.05% gain in my portfolio. Palantir has also done good as well, and currently sits at a 50.07% gain. And then PayPal, which is my only negative position, is pretty much in the same spot as it was for my last update. Currently, it sits at a loss of 9.11%. Since my last update, I haven't made any changes to my portfolio, so right now we're at 70.97% invested, which leaves me with 29.03% sitting in cash. We'll now take a look at the SPY chart, and you'll see that since my last update, we have moved off of the highs. So I'm going to end up putting this green line right here, and this is going to represent the resistance level. And this one down here on the bottom is going to be considered the support level. So the reason that the top line is going to be called the resistance level is that when we get into a situation like this, it's far more likely for the price to bounce off of it before actually going higher. And the one on the bottom is going to be called the support level because generally when the price reaches that point, more often than not, the price will bounce off of that support level. So when I'm looking to buy shares, I'm hoping that the price is closer to the support level than the top of the resistance level. Because if the price drops to the support level, as long as you generally think the market's going to keep going higher, buying in this area gives you way more of a bounce rather than prematurely buying in this area and then watching it fall to the support level. Because now if it bounces off the support level, you ended up buying up here, which is totally fine if the markets end up here because you're still making money. But it's all this wasted time in the middle that's not good for the portfolio, which is why I'm going to continue to keep holding that 29% that I have in my portfolio sitting in cash until the SPY price gets relatively close to this support level. If we get rid of those levels and add the 5 and the 15-day moving average, you'll see that it's pretty much right where we want it. The most important thing is having the 15-day moving average all the way at the bottom, and then you're going to want the 5-day above the 15, which right now the 5-day is technically still above it, but they're very close to each other. So what I'm going to be keeping an eye on is to see if the SPY price actually does cross below the 5-day, because that could very well indicate that the reversal back down to that support level that I talked about previously is going to happen. And that's going to do it for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.